Hello friends, this is Raj Sastry from Raj Option Trading. Today is June 5th, 2021. I want to talk about stock and option trading ideas for the next week, which is June 6th, 2021. So we will look at John Carter's TTM Squeeze indicator. So this can be used to buy stock, call or call spread. We can also use it to sell options, but we will not look at that in detail in today's session. So with that, let's jump in and get started. So here is a list of stocks here. The way I organized is I got the ticker symbol on top here and the name of the stock, price, market cap, sales, and the sales growth, very important, and also gross margin, institutional ownership that tells you how much institutions are owning this stock, short ratio, very important, and price to sales ratio, which is a valuation ratio, IV percentile, RSI, which is very important. It's a relative strength index. If it is too high, say above 65 or so, then it's too hot. Wait for it to cool down a little bit. Volume, it's in thousands. So 11173 is 1.1 million shares traded. Then I got 1 day, 3 day, 1 week, 1 month. These are the squeeze indicators. For example, CCXI has a 1 day chart squeeze, and if you look at Ocugen, it's got a 1 week squeeze, a weekly squeeze. So these are the John Carter's squeeze indicators. And then we got earnings date, very important. If you're trading around the earnings, you got to be careful. And then we got performance, 1 month, 3 month, 1 year. And also very important, it tells you the difference between current stock price and 52-week high. That will give you an idea, is the stock too hot at this point, or is it cooled off a little bit? So with that, let's look at few companies here. What I've done is I've highlighted few companies. For example, CCXI, I highlighted where there is a positive sales growth. So those are the good candidates you have to look at. And Lennar, same story. There's a positive sales growth here. And AFIN, Buckle, same story. So most of these companies with the positive sales growth I have highlighted, and also I have highlighted some companies in green color here, UA, FireEye, BSX, and few more in the next page. That tells you, with the TTM squeeze indicator, it's good to buy options at this point, or even stock for that matter. So with that, let's jump in here. Let's first look at CCXI. CCXI, it's a $10 stock. Stock has come down drastically. It's down 85% from 52-week high, as you can see here. And market cap is around 700 million or so. They got good sales, nice sales acceleration. I love this. And as you look at here, they got good institutional ownership, and price to sales ratio is okay, pretty good. And IV percentile, this is one thing you have to pay close attention to. It is 73. That means it's very high. So when the IV percentile is high like this, you don't want to go and buy options, because you're going to pay a lot of money. Instead, what you could do is really you could buy the stock of CCXI outright, so you don't need to pay too much attention to implied volatility, or you can sell them put options. So that way, if CCXI comes down, you can buy the stock at a lower price. So I think for CCXI, because IV percentile is high, I don't recommend buying the call option. I recommend basically selling the put option at a lower price. So with that, let's look at CCXI quickly. I will go to Thinkorswim from TD Ameritrade. So let's go here and put CCXI. So as you see here, CCXI chart, stock has come down drastically, as you can see here. They had some issue with one of their FDA approval for one of their candidates. And we looked at TTM Squeeze. I think it was in the 1 day chart. So this is the 1 day chart, as you can see here, 1 year 1 day. Then I got 2 year 3 day chart, a 5 year weekly chart, and a 10 year monthly chart. So right now the squeeze indicator is on the daily chart. As you can see here, the Yellow bars are getting shorter and shorter. That tells you stock is getting momentum here. And in the A wave, which is a little bit shorter term wave, the yellow bar is already above zero. That tells you shorter term there is some positive strength here. And if you look at the C wave, which is longer term, I think I can see the wave becoming shorter, which is again a good sign. So right now, by looking at this chart, even though there is a squeeze about to be formed, according to John Carter's methodology, right now it may not be a good time to really buy call option yet. So that's why I recommend probably not buying call options. Let's also look at one more chart here. So if you look at this chart here, it tells you on the balance, implied wall is up, as you can see here, it's going up, and RSI is pretty stable, and check-in money flow, as you can see here, is pretty stable, nothing great about it, and volume on the balance volume is also kind of flat at this time. So right now, I don't recommend buying call options. What you could do is you could sell some put option. So right now, CCXI $10 stock, all-time high is $70. So you could go here, you could go 7.5, 40 days out because you're selling put option here. Your aim is to collect some premium, and you don't want to take too much time risk. You don't want to expose yourself to a longer term horizon. So with that 7.5 strike price, 40 days out, good enough. Let's go ahead and get started. So with this, I'm going to be getting $95. If the stock stays above 7.5 by 16th of July, I get to keep entire $95. If the stock comes down below 7.5, I will end up buying the stock at 7.5. I don't mind for this stock to buy at 7.5, or you could sell the put option for a loss and take it from there, or you could roll this put option to next time frame, so that way you can keep collecting some more money. So with that, this is a nice trade. You could do something like this, especially because implied volatility is very high and the IV rank is high. So let's look at one or two more ideas here. Go back to the chart here. So we got a couple more here. Ocugen as example. This is also same story. High IV percentile. It's a $8 stock, as you can see here, off 53%. You could do similar thing with the Ocugen also. You could sell a put option here, or if you want to buy stock outright, it's a very low dollar stock, you could do that too. And I highlighted few stocks here, for example, Under Armour, ticker symbol UA. Let's look at this one here. So UA, if I go to squeeze chart here, as you can see here, there is a squeeze about to be formed in 2-day chart. And if you look at the A wave here, it's the bar, the yellow bar is below zero line. It's getting shorter. That's a positive indication. And C wave, which is a longer term wave, it's clearly above zero, and it's light blue, which is a bullish indication. So with that clearly in a 2-day chart, there is a positiveness. All the setups are good. We could initiate a call option purchase for this. And also, if you look at a weekly chart here, there is a squeeze formed here, as you can see here. And if you look at the longer term C wave, it's the line is getting shorter and shorter. That's again good indication. We like to see the line above zero, but we see that in the 2-day chart. So we could probably because it's gaining some momentum, we could buy some call option, or we could even buy the stock outright. It's a $19 stock. So with that, let's go here and see if you have to buy a call option, what's the best way to do. So UA is $19 stock. So you could go to Delta 70 as example here. Let me close this up. So Delta 70 is somewhere here, Delta 76. So you could just buy this call option outright, I would not do 40 days out. I would do at least 131 days out in this scenario. So delta 70, 67, I think it's close enough. You could do something like this, and you could buy this call option 17.5 within, if it's inside the current stock price, and you could just buy this infinite profit potential. If break-even point is 20.45, just above current stock price, this is one way to play. Maximum loss is 295, the price that you paid right now. If you want to play a little conservatively, you could also do some spreads. You could do 15 and 20, 25 spread. So if you do that, so you could buy a 15-25 spread. There you go. So you pay $4.20 here. Your break-even point here is 19.20, which is just above the current stock price, and your max profit is 580. This is a little bit conservative way to play. You could do something like this also. So with that, let's go back. You could also try a smaller spread also. If you want to try 15-20, you could do that too. This is very conservative strategy, 15-20 spread. You'll pay $3 and your profit potential is remaining $1.97. Very conservative play. Your break-even point is 18.03, which is below the current stock price. So with that, let's go back here and look at a couple more here. FireEye. FireEye, I think they sold some of their business to a private company. I think stock is trying to gain some traction here. If I go and say FEYE. So as you can see here, there is some news here. I think they kind of sold their some of their business. Probably it's all the way down. So what we'll do is with the FireEye, if you go back to the chart here, so it's a squeeze, as you can see here in the 2-day chart, a squeeze, and clearly A wave is above zero, C wave is above zero. That's a clear indication the setup is good. And I could see a squeeze here also in the weekly chart. And as you can see here, C wave is above zero. That's a bullish indication. So it looks like at least by looking at the chart, its coast is clear. We could buy the FireEye stock outright, or we could even buy some call option. Let's go here and look at a bigger chart here. So IV percentile is 20. That's pretty low. And as you can see here, check-in money flow is going up. Smart money is trying to go into the stock, and volume is pretty nice, good volume. So with that, let's go to the the option chain here for FireEye. So it's a $18 stock. I could go 103 days out. You could buy the stock outright. It's a very low price stock. You could buy the stock outright. All-time high is 25. Right now it's 18.92. So if you want to play options, you could also do delta 70 or so. 75 is good enough. You could just buy this outright. So it's a $2.95. And break-even point is 19.97, a little bit above the current stock price. This is one way to play. Or you could even go a little bit deeper also. For example, you could go 16 here. It's delta 79. That could be a better bet here. So you're not paying too much money here. So if you do this, your break-even point drops down a little bit. 19.70. It's below, a little bit above the current stock price. You could do something like this also. So other way to play is really do some spread. Right now stock is $18. You could do probably 15 and 25 spread. So if you look at here 15-25 spread, there you go, you're paying $4.64. and your max profit is 536. Basically, it's a $10 spread. You're paying 464. Remaining portion of $10 is your profit potential. You could do this also. Your break-even point is 19.64. You could confirm and send. If you don't want to pay so much money, you could also do a $5 wide spread. You could do 15-20 spread. So with that, if you go here 15-20, there you go. So this is a little more conservative. You are paying 365 to make 135. The risk reward is a little bit low here because right now it's already $18, so it's a little more towards 20. That's why risk reward is low. You could do something like this, a little more conservative. So with that, let's look at a couple more ideas here. Boston Scientific, again, it's one of my favorite stocks, has not done much. This is already almost at 52-week high, as you can see here. You could do similar things here. IV percentile is very low. You could do similar things. Let's go back here. BSX. So if you look at the chart here, there is a squeeze. I'm trying to see where is the squeeze in the monthly chart, as you can see here, and the C wave is above 0. That's a good sign. If I go back here, BSX, there's also daily squeeze. Let's go back to the daily chart here. On the daily chart, I think squeeze is about to be formed here. I think the wave, C wave is about 0. That's a good indication. So because there is a squeeze about to be formed here, there's a squeeze here already. I think BSX is a good play. You could buy some BSX. So, and if I go to a smaller chart here, on the balance volume is good, and RSI is trying to gain some strength. And the blue line is trying to go up, red line is trying to come down, which is good. Check-in money flow is slowly going up, which is also good. So with this, we could go ahead and either buy the stock outright at 42, or we could buy some call option. If you want to buy call option, I would recommend going 166 days out in this scenario and stock at 42. You could buy call option outright at delta 70 or so, pay $6.10, and you could buy this outright. Your break even is 44.10 above current price. As stock goes up, you'll make money. So this is one way to play. You could also be a little conservative and do spread. So right now stock is at 42. You could do 35 45 spread. So with that, let's go here. So you're paying 650. So remaining portion of this $10, which is 350 is your profit potential. So it's risk reward is not great. So what we'll do is we'll increase the price a little bit here. Instead of 35 strike, let's go to 38 strike. 38, 48. Is there a 48? No, 50, 47. Let's go to 47 here. All right, so you're paying 464, and the remaining portion of I think is the $9 spread is your profit potential. I think this has got better risk reward ratio here. You're paying 464 to make 436. It's almost double your money type trade. You could take this one. Next, we'll look at one or two more here. Probably let's look at QRT retail. Let's look at this chart here, QRTEA. All right, so if you see here, there's a squeeze in the monthly chart, weekly chart here, and line is above 0, as you can see here, and I think that's pretty much. Here there is a In 3-day chart, I think it's already positive. Squeeze is done. I think we're talking about weekly chart here, going back to the PPT PowerPoint here. Yeah, it's a QRTEA. There is a 1-day squeeze also, which we did not see in the chart completely. So there is a 1-day squeeze also. So the line is above, C wave is above zero. It's light blue, which is bullish. So I think this is a good setup here. You could buy some QRTEA, and we'll also look at the smaller chart here. QRTEA, as you can see, on the balance volume is going up, positive signal, and if you look at DMI, the blue line is above red line, which is also good. It's a little bit dropping down, which may be okay at this point, but good to keep a watch on this. Smart money is flowing into the stock, which is also good. So with this, we could buy QRTEA outright. It's a low price stock. You could buy it outright, or you could place some options also. So if you want to play options, you could buy delta 70 or even 77 in this case. Buy this strike here, $2.85, and you could your profit break-even point is 13.85. You could take this one. I think this is a better one. If you want to play spread, stock being 13, you could buy maybe say if you want to be a little conservative, you could do 10-15 spread. It's a little bit less capital intensive. There you go. You're paying $2.70. Remaining portion of $5 is your profit potential. So you're almost doubling your money. Not quite. You're paying $2.70 to make $2.30. It's a good proposition. If the stock stays about 12.70, which is below current price, you'll break even. So with that, it's also a good strategy. What we'll also do is let's look at one or two trades that we did not select here. For example, what happens if you want to do things like VIVO or Skyworks or even Apple? Let's look at one of them. Maybe let's look at VIVO. So with VIVO, as you can see here, there is a squeeze and the line is above zero here, and the line is also above zero. And there is also a squeeze here in a 2-day chart, and the line right now, the A wave is trying to gain some momentum. C wave, as you can see here, it's coming down. The bar is getting shorter, but still it's above zero. And I think there is also a squeeze forming here in the monthly chart, and line is in C wave is above zero. So in these type of situations, it's not a very clean signal. If the C wave clearly is above zero and it's light blue, then you can take that trade easily. But in this scenario, it's becoming dark blue. The lines are getting shorter a little bit, as you can see here, and also as you look at here, lines are dark blue. So I'm not very comfortable in taking the trade. Even though this can be a good trade, I'm passing it up for options. But if you want to buy stock, it could be a good idea. So let's look at a bigger chart here. VIVO here, stock is coming down a little bit. On the balance volume is also trying to go down a little bit. Smart money is also kind of going out of the stock. So in these type of scenarios, you would not buy options, because stock is kind of in the trading range for a long time. If you buy options, you lose money, and since the implied vol is so low, you don't want to sell premium also here, because you won't make too much money. So you could buy stock slowly as as the stock is dropping. You could buy slowly. That's better in these type of scenarios. I would not buy options or sell premium in this scenario. We can look at one more. Probably let's look at a Unity software, or even yeah, Unity is good. Let's look at Unity. I love Unity software. It's a great, platform for video games. As you can see here, RSI is trying to gain some traction, and on the balance volume is also trying to go up slowly. It's flat right now. Check-in money flow is indicating smart money is kind of steady here, trying to go up slowly. So it's a great chart. If I go to TTM chart here, there is a squeeze about to be formed here in the 3-day chart. By looking at here, the A wave is above zero, a small, little bit small bar here, but still above zero. C wave is kind of going in between positive and negative. If this is clearly above zero and light blue like this, I would take this trade, but right now I will not take the trade for option buying. But since I love Unity, I would accumulate the stock itself around $90 slowly, around $95 slowly. That Unity is a good stock. So with that, you could go through this chart here. I got 2 pages of the stock options, the TTM trade. The page 1 here, we got a bunch of things. CCXI is a good long-term, option stock purchase idea. And the page 2, we got a couple more here. With that, thank you very much. Happy investing and trading. Thank you.